The Nightly Business Report.
Good evening. Tonight, Sri Lanka has signed a bilateral agreement with the Hungarian Export Insurance plc to reschedule roughly 30 million euros in debt. Sri Lanka's tax expenditure for exemptions given through trade-related duties amounted to 120.7 billion rupees in the first 5 months of the year. The trading week at the Colombo bourses end today with both the indexes tracking gains. And the S&P 500 and the Nasdaq closed at record highs after a stronger than expected US jobs report.
From Studio 24, here's Anuradhi Vikramasinghe.
A very good evening and thank you for joining us. Sri Lanka has signed a bilateral agreement with the Hungarian Export Credit Insurance plc to reschedule roughly 30 euros of millions in debt, marking one of the country's first individual deals with a bilateral creditor since it entered formal debt restructuring talks.
The agreement follows the broader memorandum of understanding reached with the official creditor committee, which comprises several of Sri Lanka's key sovereign lenders. In a statement issued by the Finance Ministry, officials described the deal with Hungary as an important milestone in the government's ongoing efforts to restore debt sustainability and stabilize the economy. According to the Finance Ministry, the debt relief measure agreed with MEHIB involves rescheduling Sri Lanka's outstanding obligations to the Hungary. Through exact details on repayment timelines or interest adjustments were not immediately disclosed. The ministry framed the agreement as part of Sri Lanka's push to expedite the restructuring process and meet commitments outlined under the International Monetary Fund program. The deal was formalized this week by Finance, Planning and Economic Development Ministry Secretary Dr. Harshana Surya Peruma, who signed on behalf of Sri Lanka.
Sri Lanka's tax expenditure for exemptions given through trade-related duties amounted to 120.7 billion rupees in the first 5 months of the year. This is according to recent Finance Ministry data. According to the tax expenditure statement on Board of Investment Companies and Port City, the total tax exemption given through Sri Lanka Customs amounted to 120.7 billion by the end of May. Moreover, the tax expenditure for Port City companies amounted to 131.3 million in the first 5 months, where CID took the highest exemption value of 59.9 million. The highest VAT exemption of 5.9 billion rupees was given to manufacturing-related BOI companies, while services and utilities took the second place with VAT exemptions amounting to 2.5 billion rupees. Total VAT exemption given for BOI and SDP projects in 2024 amounted to 38.5 billion rupees. Port City VAT exemption in the first quarter of 2025 amounted to 10 million rupees and the value of 190.4 million rupees in 2024. The Export Development Board is planning to reach more than $18 billion in export revenue, which is a 10 to 12% growth this year, according to Mangala Vijayasinghe, the chairman for the Sri Lanka Export Development Board.
He said during last 5 months, export performance have almost touched $7 million mark. If the country can reach rupees $18.2 billion exports revenue target, it would be a good indication of the economy. The Sri Lankan economy has a $84 billion total GDP, and of the total GDP, export sector is representing 19.6%. Vijayasinghe said the plan is to reach 25% export prevention on the total GDP by 2030. Vijayasinghe said based on a target, we're aligning all strategies such as market diversification, product diversification, and we are trying to get more export-led business opportunities to the country. Based on that, we are trying to develop our infrastructure, including our BOI zones as well. Vijayasinghe said the country's foreign reserves were also building up at the end of this year. They expect to reach $7.3 billion by 2028 to reach $15 billion foreign reserves. Meanwhile, the 19th edition of the Hotel Asia exhibition, an international culinary challenge, is set to take place from October 20th to 22nd, 2025, reinforcing its status as the Maldives' largest and most influential hospitality trade event. This much-anticipated international culinary challenge kicks off on October 19th, bringing together top chefs and emerging talents from across the archipelago for electrifying live competitions.
Sri Lanka Customs has crossed the 1 trillion rupee mark in revenue collection for 2025, reaching the milestone much earlier than last year when it was achieved in September.
It also marked only the second time the department has crossed the trillion-dollar rupee threshold. Customs Director General Sarath Noni said despite the challenges and criticism, this is a major milestone not only for the department but also for the entire economy. He also said the total includes rupees 220 billion collected so far from the vehicle imports. The Director General commended the department staff for their efforts in combating fraud, corruption and smuggling, noting that the measures boosted revenue collection significantly within the first half of the year. For the 2025, Sri Lankan Custom has set an ambitious target of rupees 2,115 billion, highest revenue goal in the department's history. Despite the enormity of the target, Nonis expressed confidence that Sri Lanka Customs could deliver another record-breaking year, pointing to its momentum of 2024, which saw an over 60% surge in revenue to rupees 1,535 billion from rupees 975 billion in 2023. He cited improved tax collection mechanisms, tighter enforcement of penalties and streamlined administrative processes for driving these results, while also stressing the importance of correct import validations, of proper classification of goods and critical factors.
Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The trading week at the Colombo bourses end today with both the indexes tracking gains. The ASBI and S&P SL20 conclude the trading day in the green. The turnover for the day stands crossing 6.7 billion. And for further insights, we speak with Manusha Kandanarachi from First Capital Holdings.
Thank you, Anuradhi. Rebounding from the previous day's selling sentiment, the Colombo stock market closed in positive territory today, gaining 47 points to end at 18,148. However, the index reversed course today, initially facing selling pressure during the early hours of trading as well. It later stabilized, moving sideways in the latter part of the session. Key contributors to the market's upward movement included banking sector stocks such as Commercial Bank and HNB Bank, along with conglomerates such as John Keells Holdings, Maersk Corporation and Sunshine Holdings as well. Turnover reached 6.8 billion rupees on the back of multiple off-board transactions, reflecting a 31% increase from the monthly average, which is around 5.2 billion rupees. Notably, CT Holdings and Cargill's together accounted for 38% of the total market turnover, driven by two off-board transactions. The food retailing sector was the top contributors to today's turnover, accounting for a share of 32% as well. This was followed by the capital goods and material sectors, which jointly produced a contribution of 30%. The top three gainers of the day were Abans Electricals, Abans Finance and Access Engineering PLC.
The Colombo bourses experienced a mixed week with selling pressure causing some losses in the indexes earlier in the week, yet ending mostly on a positive note. For further insights on how the market performed this week, we speak with Shahana Kanagaratnam from First Capital Holdings.
Thank you, Anuradhi. The Colombo Stock Exchange started the week strongly and generally held its momentum, although the index saw some volatility due to profit taking. Investor sentiment remained broadly positive and was somewhat supported by the successful completion of the IMF's fourth review under the Extended Fund Facility during the week. Daily turnover remained strong throughout the week, averaging between Rs 6 to 7 billion. A key highlight was the off-board transaction of 1.7% of LOLC Finance on Tuesday, which generated Rs 3.3 billion in turnover. Both retail and high net worth investors were active in the market. Sector-wise, interest was focused on diversified financials, banking and capital goods. In summary, despite some midweek fluctuations, the market ended on a positive note, with the all-share price index closing at 18,148. Thank you.
Gold prices have stalled its pullback from a weekly high of $3,366, finding fresh buyers in Asian trading. Thin trading will likely extend due to a U.S. holiday, which could exaggerate gold price moves. Gold began to recover during the Asian session due to concerns about the U.S. budget deficit, and the House of Representatives approved U.S. President Donald Trump's massive tax cut and spending bill, which is expected to add more than $3 trillion to the country's budget deficit over the next decade. Amid holiday-thin conditions, gold prices are looking to reverse the previous retractment from weekly highs as the US dollar recovery is fizzling out amid fresh concerns over President Trump's tax spending bill. Oil prices fell with focus squarely on the upcoming OPEC Plus meeting for more cues on production, while Iran reaffirmed its commitment to nuclear non-proliferation. Brent oil futures for September fell 1.2% to $68.02 a barrel, and West Texas Intermediate crude futures fell 1% to $66.30 a barrel. Both contracts were up between 1% and 2% this week, but were nursing double-digit losses from prior weeks. Trade was thinned by the U.S. Independence Day holiday today. The Organization of Petroleum Exporting Countries and Allies, a group known as OPEC Plus, is set to meet over the weekend, and recent reports indicated the cartel is gearing up to once again hike production by 411,000 barrels a day in August, following similar hikes in the past 3 months. The Sri Lankan rupee has changed slightly against the US dollar today, and according to the Central Bank of Sri Lanka, the buying rate of the US dollar has increased while the selling rate has seen a decrease. The Sri Lankan rupee has appreciated against a basket of other foreign currencies, while it has slightly depreciated against Gulf currencies. With that, let's take a closer look at how the Sri Lankan rupee is performing today against other major global currencies. Short break now. This is the Nightly Business Report. Welcome back. The Maldives' most prestigious international hospitality trade event, the FHA Maldives 2025, is set to return from September 7th to 9th at Central Park, Pulau Gumal.
With a powerful lineup of global exhibitors, and this year, Sri Lanka's companies are stepping into the spotlight like never before, with the participation already confirmed from around the world, from Germany in the west to UAE in the Middle East and China in the east. FHA Maldives 2025 is a drawing global giants across the hotel, food, beverage and hospitality sector. In a good showing, top-tier Sri Lankan brands have joined the elite list, taking center stage to showcase national innovation, craftsmanship and excellence to an international audience. Their participation helps cement the country's reputation as a legendary force to South Asia's hospitality supply chain. The event also serves as a strategic international platform where businesses can strengthen their regional presence and form critical partnerships. Companies in food production, hotel amenities, kitchen equipment, apparel, spa and wellness stand to benefit immensely from the exposure. Whether you're looking to expand exports, test a new market or connect with the right distribution partners, FSA Maldives 2025 offers a scenic yet powerful setting to scale. Additionally, FHA hosts a prestigious global culinary challenge which draws talented participants from over 20 countries. In 2024, more than 400 chefs competed across 21 categories with over 600 entries.
LG Electronics has announced the opening of its office in Sri Lanka, operating under the entity of LG Electronics Singapore Limited.
This strategic move marks a significant milestone in LG's continued commitment to the Sri Lankan market and the collaboration with Abans plc in a long-standing partnership with over 40 years. While strengthening local presence, LG aimed to deepen customer engagement and accelerate the delivery of innovation products and smarter life solutions tailored to the evolving needs of the Sri Lankan customers. LG Electronics Sri Lanka's Office Managing Director Keith Chung said the ongoing partnership with Abans has been instrumental in expanding LG's footprint in Sri Lanka. With the opening of the LG office, they are positioning themselves to take the partnership to a next level, ensuring closer collaborations and continued innovation for Sri Lankan customers. The establishment of LG's office will strengthen the decades-of-long relationship and will facilitate closer alignment with Abans' extensive retail network, further strengthening availability for LG's global best practices and support of LG products throughout the country.
Fashionbug has been recognized as the best retail textile brand of the year at the Asia Miracle Awards 2025, reaffirming its position as a leader in the industry. The award celebrates the brand's commitment to quality, innovation and exceptional service, marking a significant milestone in its journey. This award was accepted by Selwyn Saleh, the Assistant General Manager at Fashionbug, from panel of luminaries. Fashionbug Director Shabir Subayan stated that this is a testament to the dedication and passion of the entire team who worked tirelessly to uphold the values that define Fashionbug. Being selected as the best retail textile brand of the year 2025 inspires them to continue shaping the future of the industry. Recently listed among Sri Lanka's top 50 most loved corporate brands and recognized as one of the most loved clothing store brands in LMD's Brands Annual 2025, Fashionbug continues to earn widespread admiration, with its latest accolade further highlighting its role as a trailblazer in the retail textile sector. Tokyo Cement Group reported a turnover of 12,960 million rupees and a profit after tax of 664 million rupees for the fourth quarter ending 31st March of this year, compared to a turnover of 13,145 million rupees and a profit after tax of 722 million in the same period last year. The diminished earnings can be attributed to price reductions as volumes grew by 13% in the quarter. For the financial year ending on the 31st of March, the group reported a turnover of 50,096 million rupees compared to 49,824 million and a profit after tax of 3,459 million against 242 million rupees respectively over the previous year. Despite a 15% year-on-year increase in sales volume, turnover grew by only 1% due to widespread price reductions across the industry aimed at defending market share in a highly competitive environment. The 43% rise in profit after tax reflects the lower margin base of the prior year, further supported by strategic cost savings from optimized sourcing, currency appreciation, lower freight rates and downward trending finance costs. The cement industry recorded a year-on-year demand increase from 3.96 million metric tons to 4.71 million metric tons, partly owing to latent demand and the low base effect of the previous year. HNB plc, one of Sri Lanka's most innovative private sector banks, has partnered with Microcars Limited to offer leasing solutions for a wide range of passenger and commercial vehicles.
The partnership marks a significant step in enhancing vehicle accessibility for individuals and businesses through flexible, affordable financial options. This collaboration enables HNB customers to access leasing facilities tailored for some of the most sought-after vehicle brands in the market. The initiative is designed to support mobility needs of the professionals, entrepreneurs and transport operators by providing streamlined finances that accommodates diverse budgets and repayment capacities. With this initiative, HNB reinforces its role as a key enabler in the automotive financing space, helping customers transition to modern, efficient vehicles while managing the financial planning more effectively. The bank continues to deliver convenient, tech-enabled solutions that align with its commitment to economic development and customer empowerment.
Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian equity markets struggled and European stocks looked set to open weaker despite record highs for Wall Street overnight as US President Donald Trump's deadline for the trade deals loomed next week. Japan's Nikkei rose 0.1% after flipping between gains and losses in early trading, and South Korea's Kospi sank 1.8%. Hong Kong's Hang Seng dropped 0.4%, although mainland Chinese blue chips added 0.7%. Taiwan's equity benchmark shared early gains to decline 0.9%. Trump said Washington is sending letters to countries specifying what tariff rates they will face on exports to the United States, a clear shift from earlier pledges to strike scores of individual deals before July 9 deadline when tariffs could rise sharply. The S&P 500 and the Nasdaq closed at record highs after a stronger than expected US jobs report, while Nvidia shares spiked and its valuation neared $4 trillion.
U.S. stocks rallied in a holiday-shortened session on Thursday, with the Dow and S&P 500 each adding roughly 0.8% and the Nasdaq climbing 1%. The gains pushed the S&P 500 and Nasdaq to fresh record highs. Meanwhile, shares of Nvidia rose more than 1%, putting its market capitalization close to $4 trillion. The AI powerhouse is close to becoming the world's most valuable company in history. Other stocks on the move included TripAdvisor, which climbed more than 16.5% after the Wall Street Journal reported activist investor Starboard Value had built a more than 9% stake in the online travel company. And shares of Datadog jumped about 15% after the cloud security firm was set to replace Juniper Networks on the S&P 500. Markets will be closed Friday for the July 4th holiday.
Tesla's sales volume in Germany fell by 60% in June, and the German road traffic agency KBA said that although sales of battery vehicles have risen overall.
Tesla's challenges in Germany showed no signs of slowing down on Thursday. Industry data saw the electric vehicle giant's sales volume down 60% in the country in June. That was despite sales of battery EVs rising overall. The data was provided by German road traffic agency KBA. It said Tesla sold 1,860 cars in Germany last month, down 60% from a year earlier. It comes after the number of Teslas sold in the first half of the year dropped 58% compared with a year earlier. The KBA said the total number of newly registered EVs went up by close to 9% in June. Tesla's sales also dropped to a sixth straight month in France, Sweden, Denmark and Italy. It shows the challenges the company faces as competitors with newer models gain market share. CEO Elon Musk's popularity has also declined, with protests against him seen in Germany earlier this year. By contrast, the data showed Chinese giant BYD saw sales jumped threefold to 1,675 units in June.
And that wraps up today's Nightly Business Report. We value your opinion as always, so please share your thoughts and feedback with us through email at feedback.ad24english@derana.lk or via WhatsApp at 076-805-7933. We'll see you again on Monday with the latest updates across the business globe. And until then, I'm Anuradhi Vikramasinghe. Thank you very much for watching and have a great weekend.